Welcome back to Lipstick Index, where we take the big, scary money ideas and make them tiny. Last time your money was quietly melting. Today, a question. The moment you hand your money to a bank, where does it actually go? Picture this. You walk into a bank, you hand over $100. Someone smiles, types something, and gives you a little receipt. And here's what you imagine. Somewhere in the back, there's a drawer. Your drawer, with your $100 sitting quietly inside, waiting for you. There isn't. Your money doesn't sleep in a drawer. The second you let go of it, it goes to work. Let me show you how. Think of the bank as a giant swimming pool. Everybody in town pours their money into the same pool. Your $100 doesn't get its own little corner. It mixes in with everyone else's. Now, the bank notices something. On any normal day, only a few people come to scoop a little water out. Almost everyone leaves theirs in, so the bank does something clever. It keeps a small puddle near the edge, enough for the people who'll show up today, and it quietly sends the rest of the pool out the back door. Out to your neighbor, borrowing to buy a car, out to the bakery down the street, buying a new oven, out to a young couple buying their first home. Your $100 is now an oven, and a car, and a front door. This has a name. Bankers call it fractional reserve. That's just a fancy way of saying the bank keeps only a fraction and lends out the rest. Keep a little, lend a lot. Why would a bank do this? Because lending isn't free. The bakery pays the money back with a little extra on top. That extra is called interest. The bank hands a tiny sliver of it to you for letting your money swim in the pool and keeps the rest. That gap is the whole business. So your money's working two jobs at once. Still yours? Right there on your receipt. And also out across town, building an oven. And here's the strange, true part. The money the bank lends out gets spent and then deposited into another bank, which keeps a little and lends most of it out again. The same few dollars quietly do work over and over. The town ends up with far more money moving around than was ever actually printed. It isn't magic, it's just trust passed from hand to hand. But here's the grown-up twist. That trust has a limit. What happens if everyone shows up on the very same morning and wants all their water back at once? The little puddle at the edge isn't nearly enough. The rest of the pool is out in the world as ovens and cars and front doors. This is called a bank run. And it's exactly what happened over and over during the Great Depression. People panicked, lined up, and some banks simply ran dry. So in 1933, the government made a promise. If your bank fails, your savings are protected up to a limit. That promise, called deposit insurance, is the real reason you can hand over your $100 and still sleep at night. Not because it's locked in a drawer, but because enough people trust that it doesn't need to be. So next time you tap your card or check your balance, picture it. Your money isn't napping in a vault with your name on it. It's out in the world, an oven, a car, a front door, quietly doing work and finding its way back to you when you need it. A bank isn't a box, it's a pool. And your little splash is helping the whole town swim. Next time, a bigger question. If banks can lend out money they don't quite have, then who decides how much money should exist in the first place? There are people who can make money cheaper or more expensive for everyone with a single number. We'll go and meet them. If this made one big idea feel a little smaller, give it a like and follow along because there's a new one every week. I'll see you next time. Educational content, not financial advice.